Good afternoon, good evening, everyone. Today is Thursday, September 19th, 2024. Our goal here is to review the market generated information in a holistic fashion. We're intimately following the auctions narrative of both ES and NQ. If we have time, we'll theorize and add additional commentary towards the end. We did not speculate in the market today. We took the day off. So the majority of the view is going to be in hindsight, looking at the MGI. All right, let's get started. So we'll start with our typical questions, summary questions. Where's the market coming from and what is price trying to do? So we can get a better understanding of the narrative of price and the expectations. So do recall that yesterday was the FOMC with the 50 basis points or half a percent being cut. That had its impact, and it's going to take time for the market and the economy to digest that. Following up from there, from the economic calendar, we had our jobless claims, the Philly Fed, and then some 7 a.m. Lighter data. Coming after the FOMC, I would imagine it's not going to be too impactful. For our earnings, we did have FedEx after the bell, and the other ones are not too much weighted or too impactful. We'll look at the sector tracker shortly. So again, understanding where we're coming from, looking at the monthly, the weekly, the daily. We had our downtrend that was in control with the potential lower high from the bears being completely ran through. Even so much that the 2-week balance zone that the bears broke out of had no real continuation after the last impulse down day. We immediately drifted up as we did for the overnight session of today, completely drifted back up into the balance range, and now we're building more volume near the top of that range. So for the S&P 500, ideally the goal for the buyers who are in control from the highest time frame to the intermediate and even on the dailies was to continue to build volume in the high range of that 2-week balance zone. And clearly they did a good job, but we'll need a little more context. We can't look at this from the seller standpoint, because the sellers have not done anything to maintain their control. So as of right now, they would be irrelevant to a degree. Also, the goal also was to not only build volume above this balance zone and continue to break out of the balance. They wanted to hit these all-time highs, which on the continuous contract is essentially the 5784s, which they did hit. And again, it's more important for the buyers to continue with the continuation higher, because with said 2-week balance range, the breakout below had no real follow through. So this was a failed breakout. The bulls want to ensure that the same thing does not happen here, and we find our way back into this range. For the NQ, essentially the same situation here. They wanted to build volume higher and really get above these 20,200s, 280 to be exact. We came close to it, but they fell just short. But the same situation, build volume higher and really protect their lows. Looking at the actual footprint for the daily, we can see we had about 600 points of range. Max was 4,700 for the delta. Settlers really had no control of the day. They really pushed it on towards the end, essentially finishing neutral with a little bit of excess sellers. So a lot of that we would assume would be some new money shorts and the take profits as well. It's a little more pronounced on the S&P 500. You can see the extremely thin volume on both indices, because the majority of this price action was done in the overnight. All of this was done in RTH above that overnight drift. So sellers, they had control for a while, about minimum of a little over 12K. Buyers, not too much, but the buyers definitely tried to fight a little higher in these prices, but sellers really became more aggressive, not only on the passive side, but really starting to hit the bid, which we would assume that is near those all-time highs. People taking profit above and just before and just around that area in general. We shouldn't see too many longs um, from what we're seeing on this footprint, but we'll need an intraday for a little more context. Speaking of context, S&P finished 1.7% up, with the leaders being technology, followed by consumer discretionary. So that's always the 1-2 punch that we like to lead with: Amazon and Tesla, Apple, Microsoft, and then the semiconductors. Tesla's up 7%. Nvidia is up essentially 4% alongside Apple and Broadcom and Salesforce being up, including AMD. So yeah, just nice from the chips across the board, even with Microsoft being up almost 2%. And then just nice from everyone else as well. Even financials got them some up 1%. Healthcare, a bit of a laggard at 36 basis points. But what do? They did their best. Industrials up 1.5% alongside materials. And you really can't look too much at this consumer staples and utilities. They're not really attractive in times like this, where it seems like it's more the popular assets got more of the love today. Looking on the intraday basis, the S&P 500, again, sellers out the gate. First hour, second hour, just really pushing it, but no real progress. You can see all the sellers here at the lows. We found our way back up. All the selling here, trying to push for new lows, eventually failed, beach ball, and really just sat sideways. I would imagine a little bit of a squeeze, some offsetting of those shorts, and then we were essentially just finished with a doji candle closing essentially near where we opened. So not too much to say there when the majority of the action was done in the overnight. But again, we'll look at that shortly on the 3-minute candles. Moving over to the NASDAQ, same situation here. You can see the sellers just really stepping in here and here, essentially here as well. And to end the day, no real buying pressure. Yeah, really above. I mean, we had our initial candle to the highs and just real no continuation for the rest of the day. Just a lot of building volume. Again, no much conviction near that pivot point for the NQ, who's in a totally different situation than the S&P 500. Go ahead and look at that 138-minute candle again. This is indeed a lower high. So not yet. Not yet. Though new high for the S&P 500. Pierced it for about 10 points or so, something like that. So fairly nice showing. Closed near the high. Solid. And then we'll look a little deeper with the 3-minute candles. Forgive me. Before we get to the 3-minute candles, I skipped over the market profile. So profile again, S&P 500, completely different situation. We were able to pierce through these all-time highs by 12 points. Yeah, 12, 13 points or so. Looking at the weekly balance and then the monthly profile and then the composite, you can see we're just building volume higher, B-shaped profile with that FOMC day, and then just completely exploded to the upside in the overnight. And then all that volume was held, leaving us with the P-shaped profile for the day. Completely bursting through the stops. No singles from what we can see in this profile, which is interesting. But again, the majority of this was done in the overnight, so not too much now that we look at that. So solid day to get us to the all-time highs. And then about damn time, the NQ was finally able to burst through that singles area that they were waiting for the longest, which is actually where they left some singles here around these 960s. Which is interesting to see. So they were waiting for that for the longest. Just can't really see it too well on a profile, but there are a lot of stops here near the 930s or 940s or so. So once they burst through that, they left a little bit of singles, and then unsurprisingly, they were able to completely burst through and then just find continuation to the upside, finding this zone near the 20,200s, which is this high volume node here for the composite. So we came from high volume node here from these lows all the way back to this high volume node here. So again, totally different situation. We're not at all-time highs here for the NQ. We are indeed stuck between these 20,200s and the 19,200s. So about 1,000 points of range for balance from what we've seen, with some gaps in between. Oops. Now we will head to the 3 minutes. So we'll look at the NQ, we'll start with the S&P 500 to make a point. So again, this is the 3 minutes. We had, just for a little more context, we had our Sunday session, which was balance Monday, with a drift up into Tuesday for the high to low day, bear flag balance as we head into FOMC, more balance heading into FOMC, SOC candle, big range. We leaked below, and as we leaked below and tested under for about 10 points or so, immediate drift back up into the overnight session. Drift back up through the prior day's DGPs, which was already tight in general, through the midpoint of the SOC, threatening the stops, and then we pull back into the prior day's IB mid. And again, all this is in the overnight. And then a extreme thrust upwards with much urgency, no pullbacks through the overnight pivot, threatening the same stops. And then it was just a straight grind up above the 5 smoothing average. Straight trend up day for the overnight session. So again, massive range from the overnight. The buyer started out above the SOC high for the FOMC. As the market opened, with this great gift to the buyers and a lot of stuck sellers, we can see how we responded. We started off with an open drive. S&P 500 is a bit weak. I would imagine that's coming from healthcare. Maybe a few others were selling off initially, possibly take profit. Who knows? But we're extremely close to all-time highs as we headed into the session. So as we start near all-time highs, we do an open drive, not rejecting yet until we have more information, but we're moving away from the all-time highs and going where? We're going to the SOC high. That would be the most nearest reference if you're not going to look at all this overnight drifting. There's no real way to find like demand when the whole thing was just like a drift up. So the nearest reference points would be the SOC high. Hit this SOC high, bounce up, end up making like a little higher high, but ended up making a lower low and closing near that low. Found some sort of continuation with the hammer candle to finish with the down spike, and then an immediate reclaim of the RTH VWAP. Excuse me, not the RTH VWAP, but almost reclaim of the 5 smoothing average. Headed back into the the initial balance midpoint, the yellow line. So again, to make sure that we understand just the importance of this, we have this massive drift up. And as soon as we open near all-time highs, we have an open drive back to test this as FOMC high zone. As we touch it within 10 minutes or so, we are immediately back into the midpoint of the first bracket. And then we drift up above the 5 smoothing average. As soon as we have an opportunity to go lower, through the 5 smoothing average, through the RTH VWAP, through the IB mid, immediately reclaim back into their range. New high. And that there is the all-time high. And then we have some take profit, I would imagine. And then we pretty much grind this RTH VWAP in this initial balance midpoint. And essentially just two-way trade. Just a little higher highs, no real pushing above, lots of stops, short squeezed. And really just using this IB high and this open as some support until they couldn't do it for much longer. And then we close near this open pretty much for a Doji day. So interesting to see the open drive to test and confirm support, found support, and then finished near those same highs, which was the open. So it may not look the prettiest, but solid day for the S&P 500. A little bit different context for the NQ. Do remember they are a bit weaker in their structure, but their overnight drift was much more pronounced, well above their FOMC high. Their pullback into the prior day's range was nowhere near as exaggerated and emotional as the S&P 500. They have 2 bars down, 2 bars up, 4 bars down, goddamn 12 bars up. So I mean, the most ground that they gave up was their most recent pivot for their overnight, which wasn't much. And even when they broke that, they immediately got back in. So NQ was fairly bullish overall, not only from the RT8 session, but just the way they traded in the overnight session. If we had to look for the actual plays of the day, which is something we've been doing more for ourselves just to have a bit of a context for our playbook, this would be the reclaim 40 minutes in this candle here. Looking at these 1 minute bars, we understand our opening extremely weak, but as the S&P 500 is testing their FOMC zone and they're finding support, NQ is finding support itself. So our job is not to initiate here. Our job is to recognize that there is indeed an initiation and a reclaim. As we're reclaiming and we're grinding up here on the first leak lower, testing this IB mid and closing back into these 5 smoothing average range, this may be a bit of a wider stop indeed, but this here is about 25 points and easily targeting these highs, which is about 80, 90 points away. So an easy 3-to-1 for sure. You'll for sure be taking price risk with more information risk, but given the context of where we are, you can easily take that trade without any kind of fear, given the context of everything. Looking at the S&P 500 with the same situation at that 710 mark, about 40 minutes in. Again, these are the 1 minute candles. So same context here. We ended up selling off, staying below the 5 smoothing average this whole time. And as soon as we get into the FOMC zone, we have some reactions. Not a real engulfing candle, but indeed a higher high. But couldn't stay above the 5 smoothing average. We go back under, make this new low, reclaim the 5 smoothing average. And then the same situation here. We just want to gauge and make sure they're actually able to get in here and really have some sort of continuation with this leg above. And then as soon as we have an opportunity to fall out, extremely testing this initial balance midpoint and getting back into this range. This ended up being about 6 points itself. Same thing targeting the highs, which is well over a 2-to-1, which will have your stop about your take profit about somewhere here. So that'd be a bit of a pullback, taking price risk over information risk. So if you don't have to have the most accuracy there, but given the context of everything, you would imagine that dip that you're buying will be reverted into the 5 smoothing average to continue the trend up that we had from the overnight session. All right, I'm gonna leave it there. I believe we were able to hit everything. Let me double check my notes. So just a reminder, we'll be finished with our roll tomorrow. Friday is going to be the last day. That'll be options expiration and then the futures expiration as well. So you may see a bit of a strange behavior. Do remember that we are at all-time highs, so we may see this bit of a grind up. We're going to have our notes that we can review over the weekend, so that way we're a bit more prepared. But again, very solid day for the buyers. We'll give them, definitely a plus for today. Well, let me not say A plus. We'll give them a B plus, given the overnight drift and then their ability to hold that range without any kind of issue. They were given a gift and they protected it. So now they have favorable position, and we are back at all-time highs, or near all-time highs rather. Not so much for the buyers on the NQ, but relative speaking, they did an awesome job, and a much better performance from the buyers on the NQ with the current price action, opposed to the S&P 500, to where they are structurally. All right, we'll leave it there. Thanks you again for watching. I'll do my best to do a video tomorrow. My goal is to make sure that I am taking my breaks and being mindful of my professional career and a little less on my content making. It is nice to have these videos indeed, but it is important for me to take my breaks because I am a trader first, for sure. But all right, enjoy your time. Have a good day. Take care.